All right, good morning, ladies and gentlemen, boys and girls. Welcome to Friday morning team call. Excited to see you all on this morning. I have a great call lined up for you today, so listen fast and listen close. Make sure you got pens and paper close by. We're going to have some great training today. John Paul hit me up last week and had a great idea for some training that we're seeing some people asking some questions on positioning and presenting critical period, and that's a huge cornerstone of our business and one that we've got a lot of people write a ton of business using that concept. So stay tuned, but we've got a lot to get to before we get to training. So without further ado, let's hit some leaderboards and top 10 on the leaderboards this morning. Mr. John Paul Vetter coming in with one application, $2,027. Mr. John Paul is moving more towards the team coaching side, so we'll still see him on the leaderboards, but not uncommon to see other people knock him out of the top. But just keep in mind, anytime he wants to, he will come for you. So just don't get too cocky. So anyway.
Yeah, don't get it twisted.
Yeah, that's right. Yeah. Number 9, Mr. Spencer Cushion, 4 applications, $2,047, directed myself. Miss Donna Bates, 2 applications, $2,278, direct to Spencer. Eva Bowman, 2 applications, $2,994, direct to Miss Stella Dinwiddie. Natalie Hermit had 3 applications, $3,131, direct to Eric Sullivan. We had Terry Myers, 6 applications, $3,811, direct to Stella Dinwiddie. Andy McKinley, 4 applications, $4,564, direct to myself. Miss Diane Newman, number 3, 2 applications, $5,424. Great job, Diane. Direct to Spencer Cushion. Number 2, Miss Jennifer Gray, 7 applications, $5,649, direct to John Paul Vetter. And the number 1 this week, leading from the front with app count lead, 8 applications, Miss Stella Dinwiddie, $5,846, direct to myself. And quick note here, last week, we always want to call out last week's numbers because, again, our call this morning, we call out all the numbers up to this point, but you have the rest of the day, Friday, and Friday is a great day to write business, as proven last week by Miss Stella Dinwiddie, who came in with 2 applications for $5,109 on a Friday afternoon, guys. Where can you go in life where you can go out on a Friday afternoon and write $5,000 worth of business? I mean, this is a phenomenal opportunity. So if you're wondering about this business, checking it out on the call for the first time today, that'll give you a little insight to what's available here. Hey, we had 2 brand new riders on the week for the week, so we want to give a big shout out to Keosha Gladden, 1 application, $420, APV, direct to Natalie. And congratulations, and both to Keosha and Natalie, and that's her 2nd new rider on the month already, and just in the last couple of weeks. So congratulations, we got a fast-growing team there. That's exciting to see. And Mr. Bjorn Foss had 1 application, $1,258, direct to myself. So congratulations, Bjorn, getting on the leaderboards. And as we say to all new riders, if you can write 1, you can write 2. If you can write 2, you've got yourself a business started. So keep up the momentum. All right, guys, we have a huge announcement, probably the worst kept secret on our team, but we want to give a huge shout out this morning. This is one of the most exciting things in this business, and that is to recognize Miss Stella Dinwiddie, new agency owner in Symmetry Financial Group. That is a huge, huge accomplishment, and that is a milestone. Certainly not the end of the road for her. That is just the starting line, as we always say. And I want to just pause and say a couple words. Stella started with us, let's see, 2019. It's kind of, the year 2020 is totally screwed up my concept. So about April, I think, wasn't it, of 2019. And guys, she came in with no background in this business specifically, and really not much in the way of in-home sales. She'd had you know, some experience interacting with people through property management. So, and she was very accomplished in that field. But this was brand new for her. She came in here from a dead stock cold, no background, no experience, and really, to be quite frank, I don't think she minds me sharing this, not in a good place, you know, in life. Financially, she was beyond in a hole. Yeah. And you know, it's funny when she started out. I mean, she was excited to get started. She really was, and so excited because when she started, she was going to start part time, work this while she worked another job that she had just taken on to make sure she get the bills met. And then she calls me and says, "Hey, Chris, I'm going to quit my job." Or no, she said, "I quit my job. I'm going to do this full time." And I said out loud, "Well, that's great. I'm excited for you." Inside, I was like, "Oh crap, this is not good. This could go bad very quickly." And but hey, she had already made the cut, so I wasn't going to you know, I wasn't going to say anything. But I knew that was going to create a hard road for her. Just because, and you know, if you're coming in right now and you're starting into the business and you're hearing me say this, you might get a little bit of panic hit you, but understand Stella's situation. I knew where she was coming from. She had already told me that she had some serious financial hurdles to cross. And so what that meant for her is she worked 50-cent leads for the longest time. I don't know, probably still what, 2-3 months, maybe occasionally getting some 1A or 2A leads when she possibly could. But what that equated to was, you know, minimal investment. So meant 50-cent leads by default, but also just a lot of activity. I mean, just nonstop on the phones. And so, you know, for new agents coming in, or for agents that have been here for a while, and you're like, oh gosh, I'm just not, you know, it's just not taking off for me. I'm going to challenge you to look at your activity levels. That's, you know, and Stella proved it. I mean, we say all the time, activity overcomes everything. And in her case, it was a financial mountain to climb. It was lack of experience and knowledge, which she gained very quickly. And that's one thing that I will say about Stella. And you know, I get Jacob texted me this week and was just kind of congratulating. And I said, yeah, if I could figure out a way to clone Stella, I would. Because, and I've told several people that, because she has worked harder than anybody, or as hard as anybody in the company, especially at the top levels, and she is plugged into the system. She was always talking to me, "Hey, I listened to this audio, I listened to this training, it's so great, I loved it." And every turn of this business, when things were the hardest, she was listening and learning. And that's how she has gone from, again, a cold start with no background to now agency owner, meaning she will be getting a contract from the company. This will become a business entity for her. She will own her business, guys. And there's nowhere else that I'm aware of where you can start from zero experience, zero background, financial hole, and own your business in less than 24 months. So phenomenal accomplishment, Stella. I want to give you a big round of applause, because man, to achieve that in that time frame is just awesome. But I want that to be an encouragement for each and every one of you. And I don't care where you're at in this business. If you're watching for the first time, if you've been in the business for a while and feel like you've been spinning your wheels in mud, this is a business where any given day is a brand new day for you. And you could literally start from scratch. So I wanted to take time. We had, that was, you know, I hope you all recognize my DJ skills, choosing the Celebrate to come in on the call with, and we are celebrating today Stella and achieving agency owner. And with that, we haven't done this for a while, so let's do an agency manager summary, how we came out for the week. And this was actually pretty close. This is really cool to see how balanced we are as a team. Stella Dinwiddie Agency, 17 applications on the week for $13,828. Great job, team. The John Paul Vetter Agency, 18 applications, $15,780. And the Menefee Base Shop, 18 applications, $16,899. We just edged them out. And hey, you young upstarts, don't think you can knock off the old man off the mountain. I mean, we're coming in on top right here. So great job, Menefee Base Shop, on the week. But excited for this new chapter in our business. And guys, I could tell you, Stella, John Paul, we've had a lot of conversations, and both of these folks want to break out a bunch of agency owners this year. And we start now, we can do that. I see this team, my hierarchy as a whole. I think, you know, it's very realistic that we have 10 new agency owners by the end of the year. That could happen very, very easily, maybe more. And that's all going to be dependent on two things. You know, obviously we're investing heavily in you guys and time and resources, but that's going to depend even more so on you, you know, taking up that flag and making your charge, you know, to stake that flag in your business. So, but guys, let's go ahead and pivot here. We're going to do some training this morning, and I get actually, you know what? Yep, pause. Sorry, I'm getting ahead of myself. Stella, I want to hear from you. Talk to us a little bit about your thoughts on achieving agency owner, your journey. What are you excited for in the future?
Well, thank you so much. It's always an honor and a blessing to be able to just, you know, be asked to say anything. I did not expect this question. So, but off the top of my head, I would say that above all, I'm super thankful and grateful for this opportunity. I can't say that enough without crying sometimes, because you're exactly right. You know, when I came in here, I was so broke, which I do not recommend anybody to do this, but I joked that I borrowed against my own checking account. I'd do an overdraft, and I would go take out like $300, and I would take that cash, 200 of it, you know, go to the Safeway, get a gift card so that I could buy leads, and then the rest would go towards gas and, you know, just food. And because I went through this period, and until I could, you know, until I could make enough money to buy more leads and generate that income. And it was a gradual, you know, upward climb. So if you ask me how I feel today, I can't express my thankfulness and my gratefulness. You always said, Chris, that in this industry, you can go from zero to hero. And so you had also, and I saw that happen. I was freaked out. Some of you have been here a long time, like John Paul Vetter and Donna, saw that in the beginning, I had my biggest challenges, you know, were just keeping up with you all and trying to make appointments. And then beyond that, I struggled to pay my rent for the first time in my life. Never had that happen to me ever. And that's why Chris was like, oh, you're quitting your job. You know, for me, it was do or die. Like, okay, I saw myself make some money, so I knew that it was possible. I heard all these stories, and I'm like, I'm doing this. I jumped in. I made that decision. Like John Paul will say, I planted my flag. You know, this was my last stop. And so I am just super grateful, thankful. I would say that it does take, you know, sweat equity, as Casey puts it. You know, it can be a hard climb in the beginning, but man, once you get your momentum and once you get it, and you'll know when you get it, you get it. And sometimes you think you get it and you don't, you know, you stumble and you're trying to figure things out. It's okay. You know, just as long as you're consistent. And I would just, you know, recommend anybody out there who is wanting to have that same result of, like, you know, I want to be able to write consistently, put money in my bank. I want to have my own agency. You know, I want to do all these things that I came here to Symmetry for. Then just like Chris said, you know, plug yourself into here like you are. So you're at the right place. Plug yourself in all those SoundCloud audios. I would listen to them never ending because again, you know, and you know, self-development is such a big deal. I would encourage you above all is self-development. Man, that's probably the biggest thing that makes me cry. And a lot of you that know me, that it's been a big game changer for me in my life, in my business, in my home life. But, you know, most importantly, my business where I needed it to help me to be disciplined enough to make those dials, get past the mundane calls, get past the burnout period, and just keep pushing myself and moving through that. But it does get easier. So if there's any words that you ask me about becoming an agency owner is, I would just like to encourage you with hope that it may seem really tough in the beginning and slow as molasses, getting people to stay on board. But you have to look at it the same as you do with your appointments. You know, they're not all going to stick, and it's not always your fault. You know, life happens. There's different reasons, and sometimes people will circle back around. And so just, you know, just keep that faith, that belief. The number one thing is your belief, because, you know, Brian Tracy says, I love it, you become what you think about most of the time. You hear everybody here talk about mindset. That's probably the biggest number one factor that contributes to anybody's success here is their mindset and belief. Because you can learn everything about the policies, about the plans, about underwriting, about how to do it, and the promotion levels. But if you don't have belief in yourself, and if you don't have that mindset every day that I could do this, then you're not going to do it. So I would just say, you know, just have that mindset and belief, because as Chris said, I didn't have the experience. I didn't have the know-how. I didn't have the funds to buy the leads. The leads that I had were frustrating as heck, but it built my mental attitude. Now I can accept rejection a whole lot easier. So, and I can now afford to buy leads, and I can afford to do a lot of things. I can afford, you know, to buy groceries and not have to worry about some things. So it's really amazing. So I'm super grateful and I'm super thankful. Sorry.
Love you, Stella.
Excellent. Excellent. Look for big things out of the Dinwiddie agency this year. So sorry, I couldn't help myself.
Stella.
All right.
Congratulations, Stella. Yay.
Thank you.
Yeah. Big shout out, guys. All right. Let's hit some training, guys. All right.
Chris, I got one thing I want to add, if you don't mind, real quick.
Oh, yeah. Go ahead.
Yeah. No worries. First and foremost, Stella, just an amazing job. You know, I've been here, obviously, the whole time you've been here. I remember when you first started. And folks, those are cheers of joy right there. That's what this is about. You know, some people, you know, some people want that instant gratification in everything that we do, but even when that happens, you're robbed of the struggle. The path to success here goes straight through the junkyard, right? The dump. You're going to have challenges and frustrations and all that. All of us have them. It's the folks that stay committed to it regardless, and they know they're going to deal with it, are ultimately successful. So couldn't be more proud of you, Stella. You know, I remember there are a lot of times when we would talk and such about some of the challenges you were having and stuff. And I appreciate you reaching out to me if Chris wasn't available at times, or if he was in an interview or something like that, and be able to connect with me. And again, we're all a family, right? And being able to help you at certain points in time to kind of get through certain things and just kind of talk, you know, just to help you through on this journey. So one, I appreciate and respect the fact that you thought enough of me to call, and couldn't be more proud of you where you're at right now. It's well-deserved and proof positive that everybody on this call can get there, because when Stella started, it was rough, but she fought through it. So don't give yourself any excuses why you can't. Okay? Great job, Stella. Awesome.
Thank you, John Paul. Can I just say, I think the world of you. I think the world of you, Chris. And I love everybody here. And if you're wondering, if you ever came from a place that you're like, is this a place for me? Well, if you're looking for a place to help you develop the best version of yourself, you're in the right place, because these guys are amazing. Everybody here is amazing. And it's who you surround yourself with, right? So thank you.
Absolutely. And I've got one other thing that I just wanted to recognize before we jump into the training. I know we covered the leaderboards and folks for last week. And I know you made mention of it, but I want to give a special shout out to Natalie Hermit, who is actually direct to Eric Sullivan, who's direct to me. And to your point, Chris, she has had 2 new writers in the last calendar week, one of which was last week because it was actually on Friday. She had Nicole. She actually ended up writing, Nicole Willison wrote 2 applications for $1,340 on Friday after the meeting. So those were submitted late on that day. And then Kiosha Gladden actually wrote one last night with another one to come over the weekend. So super proud of that group there and the momentum that they've got going on. So don't go to sleep on them. I can see them coming through here pretty quick and fast and furious. So outstanding job there. Blessed to have you all on my team. Great job, Tally, Nicole, Kiosha, and Eric. The other thing was on my team, I've got a group of builders that we have the ZipRecruiter ads that we're working and helping them to start to grow and build their teams in interviews, and then putting second interviews on my calendar for us to onboard folks. And we're starting to really gain some momentum there. There are some folks who are really doing well. It is going to have its challenges in and of itself as well, right? And flake outs and what have you. It's all part of it. But some folks are really putting on some high quality folks on the calendar for me to do second interviews with. And I wanted to give a special shout out, although everybody is in a different stage as far as their learning curve there. Over the next week or 2, I expect that to continue to expedite. But specifically, Mr. Mark Roberts, he already has 2 new folks that are on this call today that I interviewed over the last couple of days this week, who we think are great fits for this opportunity, and they're on this call. So great job, Mark Roberts there. Keep up the momentum, brother. I know you just put another one on for me for Monday, so keep it up, okay? Awesome. That's it, Chris. Appreciate you.
Awesome. Love hearing it. That's exactly why I say we're going to have at least 10 new agency owners this year. I'm going to speak it out there, and let's go make it happen. All right, guys, let's jump on some training here real quick. And actually, I'm going to have John Paul and Stella just go ahead and unmute yourselves, because this is going to be kind of a interview back and forth process, not really scripted. In fact, I can give them a set of questions. I just have some ideas to go through. And guys, this is a concept, a sales concept, and I think a lot of times people get a little bit confused. They're actually looking for, when they hear the term critical period, they're actually looking for a product that has the label critical period on it. But it's more about a concept. And let's just kind of start out defining, John Paul, in your opinion, what is critical period? If you were to kind of give your 30-second elevator pitch to somebody just to help them understand.
Sure. So it might not be 30 seconds because I can tend to be verbose, but I want to make sure folks can get the concept here, right? Critical period / equity protection. They're terms that are used interchangeably, but designed to provide the same benefit to the client, right? So the point is, when you're dealing with an older client, right? Somebody who's a senior and somebody who's maybe in their mid to late 60s, 70, or even, close to 80 years old or early 80s, right? And they owe, let's just keep the numbers simple, right? $100,000 on their mortgage, right? But maybe they have the property value, which you need to understand is worth $300,000, okay? They have $200,000 in equity in that house. That's their family's money. That's their generational wealth or legacy wealth. And what we want to do is make sure that we protect that. That's more important than just the face value of the insurance. So can we get $100,000 in insurance coverage for somebody who is, 78 years old? Probably not. Or it's going to be really expensive. Maybe medical concerns will prevent that, but we can get a final expense product that, say, as an example, and again, keeping the math simple, let's say their mortgage payments are $1,000 a month. Well, if we get them $25,000, that's an equity protection strategy that provides critical period coverage for 2 years. $1,000 a month, 24 months, you got 25 grand. So what the point is it provides the family enough money, or the beneficiary, spouse, whomever, to cover the mortgage payments for an extended period of time so they can figure out what they want to do. Okay? To protect the equity that they have. So it's not just about the 25 grand. The 25 grand is a means to end to protect the other $200,000 in equity that they have. Because, and I say this to people in my sales presentation, and I don't know if you want to go this deep on the initial question, Chris. I can kind of pump the brakes if you want to.
Well, yeah, we'll circle on that here in a minute on
okay.
Some of the details.
Perfect. So the bottom line is that the critical period coverage, equity protection, is an amount of money that you can provide to a client to protect the equity that they have and give them a critical period amount of coverage. So when we all lose someone, no one's really thinking clearly for the first few months and such, like, especially with bills. We've all been there, right? When losing a loved one. So people find themselves in a precarious a situation or a position of desperation financially after you lose someone, especially if you're paying for funeral expenses that you aren't expecting, and you can fall behind on the mortgage payments a few months real quick, and now the house is in jeopardy of being foreclosed upon. So I'll leave it there and elaborate a little bit later, Chris, when you want to go deeper.
No, that's great. Now, and we're definitely going to get into some nitty gritty here. So guys, I'm hoping to see all of you taking notes, because this is stuff that you're going to be able to plug in today into your business. So Stella, how do you recognize why and where to use critical period? What's kind of, from the phone call to sitting down with a client, what are those, what are those flags that say this is the direction I need to be going?
Absolutely. It's a great question. And I'm glad you prefaced that it is a concept. One of the first homes that I was in, I called you, Chris, and I didn't know how to help the gentleman. And you told me to use the critical period. And I looked in Virtual Mentor for a critical period. So, yeah. So from the phone call to actually helping them, I look at their age, I look at their health condition. Those are probably two of the most important things, actually, and their why, what they tell me, what's important to them. That's a big part of it, because, their age, typically I learned anybody over the age of 55, generally, I go with that critical period. And their health, because as John Paul said, is if their health is, if they have a lot of medical diagnosis and they're not going to qualify even for a term, even if they want a 15-year term, if they're not going to qualify, it's not going to do any good for them. And then their why is because, sometimes maybe they might be healthy and 55, but maybe they don't have a spouse. And, maybe I could tell, from listening to them, maybe they're giving me hints that they can't afford a lot. And they're just more concerned about keeping, the house when they transferred over to one of their kids. And maybe they're, it's not as important for them to pay it off. So those are the three top things that I look for: is age, health, and their why.
Okay, excellent. So back to John Paul, how do you tee up the conversation? I mean, because so just for those that are new or you're kind of getting into the home for the first time, one of the first things you're going to run into is you're going to have somebody who's 75, 80 years old, and on the conversation they're going to come right out and say, yeah, I'm looking for full mortgage coverage to pay off my mortgage. Well, you're doing the questionnaire and you're looking at it and you're like, yeah, there's no way that's happening, but there's the gap between what they want and what they can get. So how do we bridge that gap?
Sure. So first and foremost, when I'm having the conversation with the customer, I plant seeds in the conversation well in advance of ever bringing that conversation up. So when I'm talking to a customer that's an elderly client, in my conversation, in my introduction and teaching them about who I am and how I can help them, I'm making reference to the fact that I'm an insurance broker. So this is exactly the way I say it to the customer. So Ms. Johnson, I'm an insurance broker. So what that means is I don't work for a specific insurance company. I actually work for you and Mr. Johnson. Okay. So what that means is I'm able to find the best coverage for the lowest rates of anything in America that you'd qualify for. Does that make sense? That fits your budget, right? Perfect. And I specialize in equity protection strategies for seniors. That's why they assign me your case file. So I'm planting these seeds well in advance. So they tend to see me as a subject matter expert and somebody who deals with this type of thing for seniors on a regular basis. And I'll also say things to them like, because first of all, you have to understand what they owe on the house versus what it's worth. So I'm going to ask them, I said, so Ms. Johnson, I see on here that you all owe $100,000 on the, it was a refinance, right? Okay, perfect. Yeah, you got to take advantage of that. The rates are so low right now that, I mean, everybody is refinancing, right? Perfect. Okay, so with that said, how long have y'all lived there? We've been here for 20 years. Wow, okay. So what's the house worth? A fair market value. What would you say the house worth? You could find a rock star realtor and get top dollar for that place. What would you say it's worth? Well, they said it's worth 300. Perfect. So Ms. Johnson, you got $200,000 in equity in that house already, right? And I'm getting her to agree with me because what you owe, the 100,000 versus what it's worth, 300, that delta, the difference there, the 200,000, that's your money. That's your family's generational wealth, legacy wealth that should be left to your children and grandchildren, right? I'm getting them to agree with me on the proposition, the value proposition of the equity position in the property. So I say, Ms. Johnson, so what I see a lot of times is folks that might want to get $100,000 in coverage for some kind of a mortgage protection. But I've got a better idea and a better plan for you that's much more affordable, right? Most folks, as I'm sure you would agree, somebody who's 78 years old trying to get a full $100,000, especially with some of the health concerns that you've shared with me, would be pretty difficult to try to acquire. And even if we could get it, it might be really unaffordable, right? So watch this. If I was able to get you a policy in order to be able to cover the mortgage payments on the house for an extended period of time, or even pay down the balance of the mortgage, if something happened to Mr. Johnson, it puts you in a position where you can keep the house and protect that equity. Because we all know somebody, whether recently or back in the day, somebody's great something or another, lost some land, property, or a house to the bank because somebody passed away and the family struggled with the payments for a few months and the bank came and foreclosed on it. You know what I mean? And I get them to open up and answer that and tell me, oh yeah, that happened to my Aunt Shirley back in 1962. People have lived that, right? So
John
what
Paul,
we want to, yes.
repeat the if question. You were talking really fast. If I was able to repeat your if question, if I was able to give you a policy, start there.
Well, hold on. So I'm going to go back and just kind of go through the flow because I know we're recording the call. So I want to make sure that I'm kind of going through the flow of what we do. What I'm trying to do with the client is get them to understand and agree with me before we even look at numbers that what I'm proposing to them, the equity protection strategy, is a better concept than what they might have had preconceived in their mind of a full payoff of $180,000 or whatever it might be at 78 years old. What I'm trying to do is show them a way to still protect the equity and the mortgage on the house by changing their mind on their perception before I ever talk about numbers, and getting them to agree with me in that conversation before we get to that, because I don't want to get down the road and now they say, well, wait a minute, I thought it was going to be $180,000. I'm planting these seeds because I know I'm not going to be able to do that for them. So I'm slowly but surely tweaking my conversation and their perspectives along the way to get them to understand and be open to being molded to my recommendation. So what I'm saying to them is basically, look, the whole point is we all know somebody that lost some land or property to the bank, right? And how much different would that family's life had been had they been able to keep that within their family from a generational perspective? Think about it, right? So what we want to do is make sure that you've got enough money that is affordable for you on a monthly basis that's going to protect the mortgage to either give your family, your daughter, and if I knew who the beneficiaries would be, I would say their names because I'm asking those questions. I would say Jasmine and Kathy, right? And make sure Jasmine and Kathy have enough money to either cover the mortgage payments on that place for an extended period so they can find the right buyer and access the full equity of that property to keep it within your family. The bank doesn't need any more money. They're rich enough. This is your family's money you worked your whole life for, and it should be kept within your family. The flip side of it says, say, hey, you owe $100,000 on the mortgage now, right? But we did a critical period coverage or equity protection strategy for $30,000. As you shared with me now on your refinance, your mortgage payments are $1,000 for you and Mr. Johnson with his pension and what you all have going. But if you shared with me, and these are all things I'm finding out, if he passes, his pension that would pass on to you gets cut in half, which is going to impact your monthly income, right? And I'm wanting them to say yes. So what if you only owed, God forbid, $80,000 on the house and Mr. Johnson passed, and you still have $30,000 for this? You call the bank and say, look, we owe 80, here's 30, refinance the other $50,000. And now, Ms. Johnson, you have a $375 a month mortgage payment, not $1,000 a month. It's a lot easier to make sure you can stay in this house and protect that equity. You see what I mean? So I'm planting these seeds and getting them to understand the concept long before I talk about numbers. So I want them to understand how this can help them and be beneficial. And it doesn't matter if it's 30, if it's 40, if it's 20,000, if it's a guaranteed issue for $15,000. The point is, it can help them, that the concept holds true all the way through that. And the point is, I'm asking them, if I can find a policy for you that's affordable, that's what's going to make sense, right? No matter what we came up with, even if I could find something for $150,000 for somebody 78 years old, and it was $1,000 a month, it's not something you would do, right? So it doesn't make sense. I want to find a strategy and plan that's going to work for you, that fits your budget, because ultimately whatever we do is designed to protect that equity you have in the house, because it's not about the $20 or $25, $30,000. It's about the $200,000 that y'all's money, right, Ms. Johnson? So that's the way I'm planting the seed with the clients, so they understand how this can help. Because, and then I'll even flip it back, and if they made a reference to somebody they know that lost some property or land back in the day to the bank because the family fell behind, I say, Miss Johnson, how much different would not only that situation have been for your Aunt Shirley, but her entire family's legacy for the last 3 decades, if she had $20,000, $25,000 to have kept that property and kept the bank at bay to make sure that they didn't foreclose on it? How much would that have difference would it have made from a generational wealth perspective? And get them to tell you, they open up and answer that, and agree with the concept of what you're saying, right? So that's the whole point. The point is, you're trying to get folks to understand that $150,000 or $180,000, even $300,000. I've had situations where I've had a client that was 82 years old and he owed $400,000 on the house. That's not going to happen. But the house was worth $1.2 million. So his family had $800,000 in equity in that property. So the point was, even if we did a policy for $30,000 or $25,000 for him to give his sons and grandsons 5 or 6 months to figure out what the hell they want to do with that house, to sell it. Selling a $300,000 or $400,000 house in today's market goes kind of quick. I mean, it just depends. It can take longer depending on the situation or location, but a $1 million, $1.2 million houses don't sell as quickly. And trust me, the bank wants that note every month. They don't care about what you got on the market and the fact that so-and-so passed away. They're salivating at the fact that there's 800 grand in equity in that damn house. They hope you fall behind. They hope that you can't keep up with it so they can steal it as profit. So if you don't think that these banks have entire teams of business analysts that run propensity modeling and profitability projections and demographics in certain zip codes and areas, you are fooling yourself. They know everything about everybody they loan money to. And they would love nothing more than to be able to foreclose on that property and take that equity as profit. So they hate the fact that I'm even helping you today, Ms. Johnson. But we don't care, because my job is to protect you and your family. And we're going to work together as a team to come up with a plan that you feel comfortable with that will fit your budget. Does that make sense? anyway, I hope that answered a few of those questions and such. I kind of did a couple of different scenarios because you're going to get different responses and stuff from people, but I wanted you to kind of hear, and I know it's a lot at once, Stephanie, because we're in the confines of the time, but we are recording the call and we'll be able to get this out to everybody and such like that. So, but that's the concept. You want people to understand what the recommendation you're going to make to them, how it can help them, and buy into the concept and strategy first and foremost from a mindset perspective. Does that make sense?
Yeah, absolutely. No, that's awesome. Yeah, and to your point, John Paul, definitely are recording this. We will have it posted. So early next week, go back and watch this a few times because there's some, very valuable nuggets. Stella, to you, we get some common objections when we start talking about critical period. One of the best ways to deal with objections is, number one, to know what they are, beforehand, and number two, really kind of address them up front. What are some common objections, and how do you kind of position a critical period where the client's going to understand it and maybe not even come to that objection to start with?
Absolutely. So overcoming the common objections, I don't know if you guys noticed, maybe a lot of you did, but when John Paul was teeing it up, he also used stories, kind of like, asking them, hey, anybody that this happened to, you lost your land, and sharing stories, really gets people to change, their perspective on, what's available to them and what's what some things that are already rolling around in our head. And so for me, overcoming the objection, I've always learned from everything I heard here and on the audios is the best way to overcome objections is to address them up front. So I know typically, most people are the biggest objections is either gonna be price, or it's gonna be, well, I want to cover the whole mortgage and I can't cover the whole mortgage, because I know going in there, we're only going to be able to cover a portion of it. Another, objection, might be, I want to think about it. But the two big ones I think on critical period are going to be the price and covering that whole mortgage. So I'm going to share some stories, much like John Paul was doing, and I'm going to I'm going to talk about how in my role and presentation, like if I'm sitting with them, so I'll go there. If I'm actually sitting with them, and I talk about what I do, and I explain to them. Well, usually, a lot of my families, they are well, it depends on who I'm with, but I'll let them know that they are, let me just gather my thoughts here real quick. Sorry, I got off track. A lot of my families, all my families, they, married, they want, they all have, some kind of life insurance policy already, maybe it's for their final expense, or they might have something with their credit union, or they may have an IRA, or might have a 401k, or, they all have, some kind of a nest egg, right? That they've already gathered, or they're trying to, build a nest egg. But none of my families, Mary, want any of that to go towards the mortgage, especially if, something happens to them unexpectedly. And, so a lot of my families, will get, they'll cover the whole mortgage, if it's affordable, that, as we get older, or if we get medical diagnosis, I start talking to them about, I'm consulting, educating them, but what I'm doing is in a way that prepares them and gets their mind thinking of, well, this is what I need then. So I start telling them about how, as we get older, usually, the insurance carriers, when they rate people, it's usually based on our age and health, right? And the older that we get, or the more medical diagnosis we get, the higher risk we are. So do you know what that means for us? Like someone like me, and they're like, well, yeah, usually it costs more. Exactly. But you know, so when we're no longer 20 years old, or, you know, or maybe we're not super healthy, you know, then those rates go higher. And so what we do, you know, a lot of people do, what most of my families do that are, you know, in your situation or mine, is they get out a plan that really takes care of their family for a period of time. You know, that time when people usually, if you lose somebody, whether it's the main income, the breadwinner, or if it's you know, somebody who we rely on, then we panic, you know, maybe after 6 months, you know, or a year, because, you know, when you're no longer here, you know, the bank's not going to come to you and say, all right, you know, I want that whole 80,000 paid up front. They don't do that, you know, they just want that next monthly payment. But what happens, you know, for a lot of my families is they're concerned because they don't have enough in their savings, or if they do, they don't want that to go towards those mortgage payments, you know, during that time of panic. They want that to be used, you know, for the purpose that they already had. And so I know that was a long-winded explanation, but those are, you know, I'm overcoming the objections by letting them know that, you know, a higher amount of coverage, you know, may not be affordable for them. And sometimes they know it, but just going through that with them helps them to see, and, you know, and they're already thinking, oh yeah, you know, that's what I want to do. You know, and you know, sometimes they'll even come out and say, oh yeah, well, you know, we just, you know, we've got a lot of assets, and, you know, we're just, you know, worried about, you know, I don't want it to be hard for her, you know, when I'm not here. And they start opening up. But I do try to overcome those objections by using stories, and getting them to talk to me, to tell me, you know, they're going to tell me what their objections usually are. If I'm bringing, you know, that out, and I'm looking at them, and I'm using verbiage like John Paul is with saying, you know, right, you know, and, you know, do you know anybody like that? Because you want to hear, you know, what they have to say. And in overcoming objections, for me, I will ask them, do you know the difference between term and whole life? Because sometimes they will, but a lot of times they don't. And then at that point, and this is how I overcome the objection with a lot of them maybe wanting to get like a higher term, you know, I'll explain to them, you know, well, with the term, you know, a lot of times people can get more coverage, but just for a period of time, it's got a termination date, you know, and the older that we get, they're usually only going to do like 10 or 15 years. But here's the thing, your mortgage is 30 years long. And so, you know, a lot of families that I help, you know, they're so grateful to know the difference between a term and a whole life, because, you know, somebody else will have helped them with a term because they think they can get more, but then it expires at, you know, 15 years, maybe 10 years down the road. And now they're looking at, you know, either not being able to qualify for anything, God willing, they live through it, or, you know, they can't afford the new increase. They, you know, and now they're at the mercy of the carrier trying to get something else. And they want something that's going to last them for the rest of their life. And, you know, they don't, and that's whether, you know, they still have the carry the large mortgage, or maybe, you know, they have, they're just more concerned about, well, maybe my mortgage is almost paid off, but you know what, I have all this other debt, and I really don't want to leave that debt for, you know, my spouse. So a lot of folks really like that, because now they can depend on using that, you know, for the rest of their life. So those are some ways that I overcome objections, because some of the objections that I've had as I've learned through this process is, well, no, I want, you know, more coverage, or, you know, I they, sometimes, they're expecting it to be cheaper. And so I'm already, explaining that to them, and I'll ask them along the way. Do you, as I'm talking to them about giving them a story, of somebody else that I just helped, because they were concerned about, when they were no longer here, they told me, Stella, I just need to make sure that when I'm no longer here, that I'm not going to lose my legacy, everything I worked so hard for. I want to make sure that my kids can, keep it. I've got some other assets, but I just want to make sure, that I can be there to help them when I'm no longer here. And then when I tell them a story like that, I'll turn to them and I'll say, there's something like, can you see the value in that? And when I know I have them is when they're like, oh yeah, that's what we're looking for. Yeah. And I'm like, okay, great. And I'll just keep moving on.
That's great. That's great thoughts, Stella. I'm going to just real quick here. I want to bring on a quick special guest, share with us for about a minute or two here. One of our agents here, you see him on the leaderboards weekly, Mr. Spencer Kushian, does a phenomenal job connecting with clients. And you see that in the numbers, because on the back end, and we don't see this, I mean, you guys don't see this necessarily on the leaderboards, but he has an issue paid rate of well into the 90 percentile, and a retention rate on clients also in that 90 percentile. That comes from a strong connection, but also, in caring about people and helping them understand the importance of this. And so, and he's written a ton of critical period. So Spencer, if you could pop on just a brief, couple minutes here and share with the folks about what, your experience in connecting with clients and helping them, see the importance, but also feel the importance, and really making it kind of a personal for them.
Yeah, Chris, can you hear me okay?
Yeah, I got you loud and clear.
Yeah, thanks for having me, Chris, and thanks for being such a good friend for what are we, about 4 years in now, and all the great work you've done with me, and just really appreciate it. And hello to everybody out there. So from Virginia. So critical period is definitely just a nice thing to have in your toolbox. It's obviously one of Symmetry's, leading products that we use for older folks. And so basically what I do is, I start to look at critical period from about 60 on, or I will actually use it for younger people with health issues or just tough to insure. Maybe it's weight. It could be other issues as well. But there's a point in I do a PowerPoint. I do pretty much all Zoom now since March. And I used to, obviously, I love being with the client. So I try to obviously want to make that connection over a Zoom call. It's harder, but that's my goal. But I have a slide that I used from, I think, way back when I started, that had some of the features of mortgage protection on it, from return of premium to kids benefits built in with strong foundation, to something that Americo termed called payment protector. And so what I do is, that's a different product. It's really not critical period. But what I do is I kind of feed off of that right then and there. And I will say, look, guys, there's two really good ways to do mortgage protection. One, obviously cover the whole amount, or two, really focus on the payments. Now, John Paul and Stella mentioned all the typical things that I would use as well, but I kind of keep it really simple. Don't get a real wordy here, especially with older folks over Zoom. Man, they can get lost in the weeds with just being too wordy. You want to just make sure it's clear and succinct. So I'll go in and explain critical period. The major benefits is, again, all of what those guys said. But the big one is cost. At the bottom line, older people want to get something cheap. They want something under $100 to $150. And that's why I make it a point to say, look, guys, yeah, we can maybe get something that you're going to pay for your mortgage, but do you want to do that, for 10 years? And then what are you going to do when you're 82? Or maybe you've priced out, you're over 85. Mortgage protection, critical period price point. You're going to have it for the rest of your life. You're going to have living benefits built in. So I kind of break it down that way, Chris, and just simplify. And again, I just do a quick review after I go over what critical period is. 2 ways to do mortgage protection, guys. Let's just review one more time. Let's pay the whole thing, pay a quarter of the thing, pay half of the thing. Could be pricey, or we can get something that is going to make the mortgage payments for 3 months to 5 years, and fit the needs while you go through a tough time, and maybe even use it if you get sick, right, and need the money instantly, you know, with a terminal illness or a nursing home waiver premium or nursing home rider like like Living Promise. So yes, I've written a lot of it. And people, I think Stella made one of the major obstacles is, you know, overcoming. People come into this thinking they're going to get something for $100 to $200, you know, and pay off the mortgage. That's just you know, that's not reasonable, to come into it over 65 years old and think that's going to happen.
Awesome. Yeah, and Spencer made a great point there. And, you know, as you go back and review this training, guys, I want everybody to, there's a lot of concepts here and a lot of things that are being shared. And this is so you can have all these tools, but be very careful. One of the things you want to keep this simple in the conversation. So don't take everything that's being said, pile it all into one presentation and just, you know, flood the zone with everything that's being shared. Take some of these concepts, pare it down to 2 or 3 or 4 things that really resonate with you, because if it resonates with you, you're going to be able to communicate it more effectively with them, the client, and you know, and create that baseline. Don't try to be switching it up and taking a little bit of this and a little bit of that. You know, there's some great trainings out there, and you can go to the Symmetry SoundCloud. There's a lot of training specifically on critical period. Tap into all that stuff, but again, make sure that you're not overselling it by just, you know, blasting them with a ton of information. So very important when you're listening to a training like this that you take just 2 or 3 nuggets, build your conversation around that, and stick to it. And if you find you're not having the success that you want to have, you can go back and retool it, but don't, you know, just keep piling stuff on. Try changing out little pieces and figure out where that sweet spot is, where, you know, you're going to be able to feel comfortable communicating with the client and where they get it, and you get that response that, you know, that helps them understand what you're trying to communicate. And so, John Paul,
Hey,
I'd like to just kind of wrapping this up.
Chris,
I'm sorry. Yeah, go ahead.
But one other thing that I would say that helps with that too, I don't know if folks use the old Symmetry form, that listed, you know, sell or stay. There was a point on that form where what the client would want to do if the other passed away. So one thing I will clearly do, which helps kind of bring it all home, is if the client says that they would stay in the home, then, or want to stay in the home, then you're trying to get them as much coverage as affordable, obviously, in their price point. But here's the key one. If they say, well, no way, it would be just too hard for me to be without John or without Susan, and they're going to sell the home, then that is the bell should go off and say, look, well, why would you want to pay $600 a month to cover your mortgage when you can do it for $90 and cover the payments while you get everything ready? And I also ask them, how long, John, do you think the house would take to sell? Well, 3 months. Well, I would recommend at least 6 months, because it's going to take time to get the house on the market. What if you need to fix some things? So that's another big tip there, using the Symmetry and analysis form.
Yeah, that's a great point. That's a great question to ask, especially when you have somebody who is single, so they've lost a spouse, and it's going to be the kids who are taking over the property. Great question to ask is, well, do they own houses themselves, and would they keep your house? 90% of the time they're going to say no, they're going to sell this house. They have their own homes. They don't need this one. Okay, well, then it really doesn't make sense, does it, to go ahead and pay this house off if they're going to sell it? Really, we just need to cover the payments until they can get the house sold. Would you agree with that? And that's a light bulb moment for a lot of those folks who are thinking that they need to pay off the entire mortgage. When you shift it into a position where we don't have to pay off the entire mortgage, we just need to make the payments until we can get the house sold, which is your goal, your stated goal anyway. So great thoughts, and I appreciate you sharing that, Spencer. So, John Paul, just to wrap us up, what would be a good summary if you were to list all kind of some bullet points for people to go through and just say, I want to check these off to make sure I'm going through the critical period process?
Sure. And I think that will vary slightly based upon kind of how you want to approach this and the talking points that are comfortable for you specifically. So I would encourage everyone to go back and watch this video again and again, whatever you need to do. That's the purpose of recording it, and jot down those notes. And don't try to, as the point was made, don't try to take everything that I say and Stella says and Spencer says and throw it into one conversation. You're going to confuse the hell out of yourself, much less your customer, right? Understand the concept of what we're trying to accomplish. And I think far too many times what happens is people try to get too granular in the weeds on the details when you just need to connect with people. Just talk with people in normal conversations so they understand what you're wanting to accomplish with them, right? So I think the point is, where folks find themselves in the most difficult situation from a sales perspective is you get into the presentation and you just go in and start talking about final expense, and then they're like blindsided because they have no idea why you're talking to them about this when they thought they filled out the form for a full payoff. That's your fault for not teeing that up the right way. If you're doing what we're telling you to do proactively from the beginning of the conversation, to where you're guiding them through this conversation about the equity position and the mortgage payments and protecting the equity in the home and not losing that, and understanding to them what's most important, that's going to allow you to be in a position that when you go to talk about critical period / equity protection, they are open to the idea mentally. That's the big hurdle. That's where most people find their challenge. So if you're doing it the right way, 9 times out of 10, people are going to understand that, and they're going to see the numbers and realize that that is affordable and it does make sense. It is going to work. So you have to understand the equity position in the property, what they want to accomplish for sure, and the fact that this is going to be a much more affordable option that will fit their budget. And we're working on this together as a team, right? So if you do run across somebody who still gets down to where they were thinking about the full payoff and so on and so forth, then you can always use a feel, felt, found. I mean, and you can use that for a variety of situations. You know, Ms. Johnson, I know exactly how you feel. Look, I've had a lot of senior clients that I've helped that have felt the same way. And what they've found is by looking at this equity protection strategy, it is something that protects the equity in the home and will provide that generational legacy wealth for your family, as opposed to trying to do something for the full payoff that's unaffordable, right? So it's just making sure they understand how this can help. This is a concept that you need to understand and just be able to have a conversation with somebody about it. That's it. If you do that proactively as you go into the presentation, when you get to the numbers and look at options, it's going to make sense for most people. You just need to educate them. So what I do with my clients, and I'll tie this up with this, is I educate them and empower them to make their own decision about what they feel comfortable with that'll fit their budget. And it doesn't have to be an overly complex conversation if you genuinely connect with people and you're real and honest. So in summary, that's really the gist of it. There's a lot of great points on today's call. Clearly, I know folks are writing feverishly. Go back and watch it again. Take notes. That's why we record these things. But we felt it was very important to kind of cover that, for folks, so that we understand that, so we can better help and protect our clients that are older, that they still want to protect the equity in their home and their mortgage. And this is a perfect example of that. It doesn't matter what coverage you get for somebody. If it's unaffordable, it doesn't do anybody damn good. Period. This is affordable in almost everybody's situation and gives them time to breathe and figure out what they want to do and not be painted into a corner facing foreclosure or a potential short sale, which still impacts the equity in the home. So
that's awesome. And that is some great thoughts there and some great training. And keep in mind, to your last point there, John Paul, almost everybody can afford it. And that means even if we buy them 2 months worth of payments, sometimes that is literally the difference between that house getting behind or them being able to sell it. So you get somebody that's on a super tight budget and their payment is $750 a month. So, that's a $1,500 policy. That's 2 months worth of coverage. Well, $1,500 policy, even on somebody older, you run the numbers on it. It's crazy cheap. You know, we've got some companies that will go down to $1,000 on a policy. So whatever we can do to provide value for that client, and then help their families out. That's the whole reason that we do this. This is how this concept came about, is because that demographic, and there's a lot of people, man, at that age group that still have to carry mortgages. They don't have their house paid off, and just financially, they want to do something to make sure that they preserve as much as they can for future generations. So,
Hey, Chris.
Yeah.
Hey, final life story that all the agents can use. I didn't share this with everybody. I had a client this past year in November, perfectly healthy, decided on critical period. She was a 60-year-old female. She got Crohn's disease. She had her policy for 8 months with Mutual of Omaha. Her husband called me bawling. And she had a living promise. You know, of course, Living Promise wanted to make sure that it wasn't anything fishy going on. He was so grateful that policy paid. So had critical period, perfectly healthy female, got Crohn's disease in the late spring, lived to go through about July, passed away. And he was devastated. So you guys use those stories because they're moving.
No, I appreciate you sharing that, Spencer, because that's huge, guys. That's, facts tell, stories sell. And we use that a little flippantly sometimes, but it's the truth. People have to. Nobody wants to think about their own demise and their own death, so we have to be able to share with them and relate with them. It's reality. It's something we're all facing at some point, and the way we put ourselves in those shoes is to hear those stories. So I appreciate that input. So guys, last thing, and we've gone over time, but I think it's been very valuable. Stay on for a second here. We've got a quick announcement. The company, the last 2 or 3 national calls has been talking about, the research that they've been doing on helping agents succeed. What are those X factors? What are those things that are helping people really, stick? Not just go out and write a policy or two, but become a consistent writer. One of those big things is engagement. Engagement not only in the system but in each other. And this is tough because even before pandemic, we all work from home, so we're kind of all disjointed. And so one of the things that they discovered in talking with some of the organizations that were having a lot of success, and you may have heard them talk about, I think both the last couple of Wednesdays they've talked about this, is the fact that a lot of agent engagement, a lot of opportunities to connect. So starting Monday, starting this next week, every day, every morning, Monday through Thursday, I'm not going to do this Friday, Monday through Thursday, we're just going to have kind of a open Zoom call for people just to hop on and connect. There's no agenda. Not required. You don't have to come. There's not going to be a subject matter. It's not going to be listening to me or anybody else talk. It's just be a chance. It's, I call it coffee talk. If we were in an office, we'd be sitting around the coffee machine, talking about business, talking about personal, talking about family life, talking about what you did for the weekend. Guys, this should be an opportunity for us to just jump on, hang out for a few minutes, probably. 30 minutes. I'm not sitting any longer than that. It doesn't even have to be that long. And so, and I'll get to the times here in a second, Donna. I appreciate the question. I'll hit that in a second. But this call is all about just connecting, guys, and talking about whatever. And if it's business, if you have questions, hey, I've got this client that, I called her the weekend and they have, XYZ disease, and I've never heard of it. We'll shoot the breeze on it. It's not really a strategy or planning call, but we'll talk about all that stuff. So again, just an opportunity for everybody that wants to, not required. You don't have to, but if you want a chance just to kind of plug in, get to know other agents, get some feedback on what's going on with other people in their business, and just connect. So we have got literally on our team people from East Coast to West Coast. From Eastern time to Pacific. So the thing that I'm going to do, I think, at least starting out, this makes the most sense to me. We may change it up later. but I'm going to actually do 2 different call times. This is going to be a Zoom call, and I'm going to do it at 8:30 Central, which would be 9:30 Eastern. So I'm going to kind of, you know, not too early, but early enough where hopefully I'm not interrupting your business day. So 8:30 Central, 9:30 Eastern, and then 10:30 Central, which for those of you Mountain and Pacific time, that should put it at 9:30 and 8:30. Okay. So threw a lot of numbers at you, but just for sake of keeping it concise, 8:30 and 10:30 Central. Do the time conversions for you. I'm the worst person to ask on time conversions because I always mess it up. So 8:30, 10:30 Central. We'll send out an announcement. We'll send out a Zoom link. I'm not sure. I may be trying to set up a separate Zoom link because I don't want to record and all the stuff that we have set up for the team meeting. But I want to make that available. And again, guys, just an opportunity. You don't feel like you have to, and if you want to every day, or if you don't want to at all, or some combination in between, you know, maybe pop in from time to time, jump on for 5 minutes, jump off for 30 minutes. I don't care. You know, we're just going to make it available for people to get together, chit chat, get to know each other, ask questions about the business, just whatever. There's no agenda. So keep that in mind. Be looking out for that specific announcement over the weekend with details. And for those of you who want to, we'll see you Monday morning at 8:30 or 10:30. So I appreciate each and every one of you jumping on, and excited for, man, the direction this team is going. We've got just some amazing things happening, and appreciate each and every one of you for going out and helping clients, helping your families, and building successful businesses. So congratulations on the week. Let's go get them.